I've helped hundreds of clients in South Jersey file bankruptcy and keep their homes because they did one simple thing before they filed. In this video, I'll show you how that same step, what's called a liquidation analysis, can give you peace of mind about whether you could lose your home if you file bankruptcy. Coming up in this video, you're going to learn 3 things that every New Jersey homeowner should know before they file. First, how to figure out if your home is actually at risk of being sold, using a straightforward method that cuts through the confusion. Second, what a bankruptcy exemption is and how this powerful tool can protect the equity in your home, something most people overlook or misunderstand. And finally, what you can do if it turns out your home is at risk, including the steps you can take to protect it before you file. By the end of this video, you'll have a much clearer picture of whether your home is safe and what to do next if it isn't. A liquidation analysis before you file is critical. You wouldn't just get in your car and start driving cross country without GPS, especially if you've never been there before. You'd want to know the route, the detours, and how to avoid getting hopelessly lost. Bankruptcy is no different. Filing without doing that analysis is like taking a road trip blind. You might get where you're going, but you also might crash along the way, especially if you don't realize that your home is in the path. So let's talk about how to make sure your house is protected before you file. And that begins with knowing and understanding what a liquidation analysis is and why it matters. This analysis is how the bankruptcy trustee decides whether an asset, like your home, is worth selling to raise money to pay your creditors. Now, this isn't based on a feeling or a guess. It's based on numbers. This is the tool that gives you the clarity before you file, and it's the best way to know if your house is protected in a Chapter 7 bankruptcy. Remember that GPS analogy? Well, this analysis is your map. It shows you what's safe and where you need to be careful before you start driving. So how do you do it? Well, you start by figuring out how much equity you have in your home. And to do that, you'll need 3 things. First, the appraised value of your home. This can come from a formal appraisal or a comparative market analysis from a real estate professional. Next, the payoff statements for all your mortgages or any other liens on the property. And finally, factor in the cost of selling the home. Usually this is estimated at 10% of the home's value, taking into account real estate commissions, bankruptcy trustee commissions, transfer taxes, and other closing costs. Once you have those numbers, subtract the mortgage balances and the selling costs from the home's value. What's left is your equity. Here's a simple example. Let's say your home is worth $300,000. You owe $250,000 on your mortgage. Selling costs are about $30,000. That leaves you with $20,000 in equity. Now let's talk about how the bankruptcy exemption works and how it protects that equity. Now, in most cases, you can use what's called the federal homestead exemption. Right now, in 2025, that exemption is $31,575 for an individual. If you're married and both spouses are filing, you can double that. This amount will change in future, but you get the idea. Now, these are federal exemptions that are used in New Jersey bankruptcies. Be aware that if you're filing bankruptcy in another state, the exemptions could be different. So, going back to our example, if you have $20,000 in equity and you're allowed a $31,575 exemption, then, well, $20,000 in equity less $31,575 is $0 for the trustee. And again, if you're married, it's double that. So that means your home is protected and the trustee has nothing to gain by selling it. But what if your equity is higher? Let's say your home value is up and you've paid down your mortgage. Now you're showing $50,000 in equity. If your exemption only covers $31,575, there's almost $20,000 left after exemptions. If that amount is big enough for the trustee to sell the house, pay all the costs, and still have money left for creditors, then yes, your home may well be at risk. That's the point where general information isn't enough. Now we're talking about your specific situation. And this is where guidance from an experienced bankruptcy attorney becomes crucial. But even if the analysis shows your house is at risk, you still have options. You're not stuck. One option is to explore a home equity loan or line of credit. If you qualify, you might be able to consolidate your debt into one monthly payment that you can afford. This could help you avoid filing bankruptcy altogether, and your house stays off the table. Another option is to sell the home yourself before filing. This puts you in control. You decide the timing, the price, and how to use the money. You can settle debts with creditors on your own terms, not the trustees. And finally, you can consider filing Chapter 13 instead of Chapter 7. Now, Chapter 13 is designed to let you keep your assets, including your home, and pay creditors over time. This option is often a better fit if you have a lot of equity that you can't fully protect under Chapter 7. So now you know how to run the numbers and spot the risk. But here's the thing. This is just the starting point. The truth is, every case is different. Your home's value, your mortgage balance, how you file, and even when you file can affect the outcome. So if you live in Burlington, Camden, Gloucester, Salem, or Cumberland County, New Jersey, and you're thinking about filing bankruptcy, don't guess whether your home is at risk. Let's talk it through. I offer a free consultation where we'll walk you through the numbers, look at your options, and figure out the best plan for you and your home. You can reach out through my website to schedule your free consultation at my office in Woodbury. I'll also leave a link in the description below.